Hello everyone. Hi how's you doing? How's your going on? Hope you yourself doing well and hope yourself keeping yourself well. So we have been joined by CM Ratul Gupta all the way from Dubai. So the purpose of this meeting is to gather information about GST as well as the VAT. So Ratul, I just want to understand on what transactions uh, uh, the refund is we get a refund from the department.
Yes, so majorly a person would be in a refund position if uh, his most of the sales are zero rated. So zero rated here works in two ways. One, there are specified list of supplies which even if provided domestically within UAE, then it will be a zero rated supply. And the second one is the export of goods or export of services, which has been ascribed zero rating, right? So so if a person is only making zero rated supplies and he doesn't have any 5% standard supplies and he's recovering input VAT in his VAT return, then he comes into the refund position. Secondly, if his standard rated supplies are less than the input VAT that he's recovering in the VAT return, then he will be in a refund position. Third thing is the out of scope supplies. So out of scope supplies, there is a unique thing here in UAE that the government is allowing input VAT even on such supplies which are out of scope in nature, wherein such supplies are not taxable from the perspective of UAE VAT laws, but still input VAT is allowed on such supplies, which as an example, I could give you our third port shipments, wherein there is sale of goods made by a UAE based supplier. The goods doesn't reach the shore of UAE. It is procured from a place outside UAE to another place and supplied to another place outside UAE. So accordingly, it is out of scope from the perspective of UAE VAT laws. But the authorities here are allowing input VAT incurred on such supplies. Don't confuse this with the exempt supplies. The concept of exempt supplies remains the same like how we have it in Indian GST laws. Any supplies which are used specifically to make exempt supplies, the input VAT on that cannot be recovered even here. Okay, so this is how a person could be in a refund scenario. Uh, Another important point is that there is no time limit absolutely to apply for a refund claim under the UAE VAT laws. It is completely at the discretion of the business as and when time permits or as and when they deem fit to apply for a refund claim, they can file it. The process is completely online. You have to fill up a specified format Excel template issued by the authorities uh, and submit it online. The interaction between the authorities and the business while determining the application of the registrant is also on online or email. Once approved, the status is shown on the portal, and from the approval, it generally takes 7 working days for the refund to be credited in the bank account of the registrant.
So it's quite looking quite simple in VAT. So as far as the refund sections are concerned. So in India, so we have multiple scenarios where we can get a refund. One is the export of goods, so wherein we have paid the taxes on the outward supplies. In case of export of goods, we can get the refund from the department. We have to file our online form, and we can get the refund from the department, as well as the input on which the export has been made. Input in respect of exports, we can get the refund. Second one is the any supplies to SEZ is also covered in the refund aspect. Third one is the inverted duty structure. So if you have any inverted duty structures, like, so what do you mean by inverted duty structure? Is the so we have a rate of output tax is more less than the input tax rate. So let's suppose we have rate of 5% in the output, and we have 12% rate as the input. So we can able to claim the refund for the differential part, that is a 7%. We can claim the refund, and the others are the, if we are going to close the business, then any surplus input tax credit can be refunded. So there are multiple scenarios wherein refund can be claimed. So these are the major scenarios where you can claim the refund. So I think as far as the refund process is concerned, so in India you can claim the refund within the 2 years time span from the date, and in UAE you don't have any time span for claiming any refund. So this is the major difference in UAE and the India. So let's come up with the input tax credit aspect. So Mridul, can you just explain us what all aspects are there in input tax credit in UAE? So we will take up the GST next.
Yes. So again, input tax credit can be recovered by the business on any taxable supplies made by them. So taxable supplies include your 5% and zero rated supplies, as well as input tax credit here, as I said, can also be claimed on out of scope supplies, which are made by the business here. So all in all, your input tax credit majorly is not lost. Okay. Next is the blocked input VAT category. So this typically comprises of your entertainment expenses, which the business incurs for the personal consumption of its employees or for its client. So again, the concept which is similar, which is provided under the GST laws in India. Uh, However, the government here has come out with a specific clarification in terms of what exactly can be recovered even under these entertainment expenses. So, for like example, basic entertainment in the form of not rather entertainment, basic expenditure on your tea, coffee, light snacks is something which they have clearly specified that if it is provided by business to its employees, the same can be recovered by the business. So this is how it is. Uh, uh, so I would rather put it up that way that there is a lot of clarity, upon releasing of this clarification by FTA. Before that, the blocked category here was per se not very clear in terms of what could be recovered as an input VAT and what not. However, with this, that at least that gray area is to an extent resolved. Still, uh, in order to put it up that way, that there could still be overlapping areas wherein the authority may deem certain categories of expenditure as entertainment in nature, whereas an assessee, a registrant may have an argument that this is in relation to his eligible business practices, which is majorly required to undertake the business. So we could see in the time to come, like how we see it in the other tax jurisdictions, a lot of argument between the business and the registrants on this aspect as well. The law is still at a stage wherein it is maturing. It is maturing very fast. Uh, we will see a lot of things on this aspect in the time to come.
Okay, great. So I would like to tell you about the input tax credit in India in GST. So as far as the input tax credit is concerned, so section 16 till section 22, it talks about the input tax credit. So input tax credit is the credit which you have already paid during your any supplies which you have purchased or which you have availed the services. You can avail the credit of that input, and you can adjust with your output liability, and then remaining amount is required to be paid as a tax. So as far as the normal services and the inputs are concerned, you can avail the credit on the basis of the invoices. So there are multiple conditions for claiming an input tax credit. One is the invoice, second one is the payment, third one is the receiving of goods or the services, fourth one is the uh, fourth one is the uh, entry in the books of accounts. That is the condition which is required to be fulfilled. So as far as the capital goods is concerned, so as in GST, you can avail the 100% amount of input tax credit paid on the purchase of capital goods in the first year only, in the single year only. So as far as the service tax is concerned, you can avail the tax credit in the single year. That is there is a clause of 50-50% is there, but in GST you can avail the input tax credit of 100% uh, in GST. So you can avail the input tax credit up to 30th of September, up to of let's suppose if we are talking about the financial year 17-18, you can avail the input tax credit up to 30th of September of next year, or filing of annual return, whichever is earlier. So these are the time period for claiming an input tax credit. And second is the uh, second is the block credits. So block credits talks about what all credits which are not permissible for an SSC to claim. So there are multiple scenarios where you cannot avail the input tax credit of the in case you have done the transactions. First one is the motor vehicle. If you have purchased any motor vehicle for the even for the use of business also, you are not eligible for input tax credit of that. Second one is the any personal consumption. You are not supposed to claim the input tax credit of that also. And a third one is the so I will brief you about the some of the scenarios. As though there can be if you have used for the composition scheme also you cannot avail, or you can or any construction done for the immovable property in the immovable property except plant and machinery. So any works contract services you have availed for the construction of immovable property, you cannot avail the input tax credit of that, except plant and machinery. If you have done for the plant and machinery, then you can avail the input tax credit. So there are multiple scenarios under section 17(5) which talks about which is the block credits which you cannot avail the credit. So this is the ineligible credit, and I've already told you about the time limit for claiming an input tax credit. One is the important aspect over here is the set off of the taxes. So how we can set off the taxes in GST is, so if we let's suppose if we are having a liability of CGST, outward CGST, then we can utilize first with we can utilize first with IGST, that is the Integrated Goods and Services Tax, and next is the CGST. Similar case with the SGST. First, we can utilize it. First, we have to utilize the IGST input tax credit, then SGST, and next is the IGST. If we are having a liability of output liability of IGST, then we have to first set off is with the IGST ITC, then CGST ITC, then SGST ITC. This is the scenario for the utilization of taxes. And so there's a one important aspect of input service distributor. So in case of input service distributor, so any branches are there, then IST can transfer the input tax credit available in the head office to the branches of that particular branches. So this is all about the input tax credit. Uh, so there are multiple scenarios in terms of job work and other ITCs also there. We can take up the specific scenarios in the next videos of ours with the comparison vis-a-vis comparison with VAT. So I think this is all about the input tax credit. Any specific?
Pratik, I have one point here.
Yeah, yeah,
I have one point to add on input tax credit here. So, as you specified the time frame in order to claim input VAT in India, something similar we have here also. Uh, so you can recover input VAT in two tax periods. From the time the conditions to meet the
yours is mute.
इतना
Your
जरा एडिट करना जरा इतना एडिट
sure,
करना जरा वो
sure. You can continue. You can continue.
कहाँ से स्टार्ट करें?
हाँ, वहीं से शुरू करो आप। इनपुट टैक्स क्रेडिट का टाइम पीरियड जो रह गया था, अवेलमेंट ऑफ इनपुट टैक्स क्रेडिट टाइम पीरियड जो था ना, उसका कब तक अवेल कर सकते
ये
हो?
उतना पार्ट फिर से बोलना पड़ेगा ना, फिर से बोलना पड़ेगा ना
हाँ
उतना पार्ट.
हाँ, कोई नहीं, आप बोलो उसको, हम कम वो कर देंगे। म्यूट हुआ।
Yes. So, Pratik, I would like to specify one point in terms of recovering input tax credit in UAE, like how you specified for the GST laws in India. So, input tax credit can be recovered in two tax periods from the time the conditions to claim the credit is met. So the conditions now this has been very recently provided by way of a public clarification in UAE. So the conditions are that first of them is you need to receive the input tax invoice from the supplier, and the second condition is that the intention to make the payment of such invoice should be formed. So from the time both these two conditions are met, you can recover input VAT in the tax period in which these two conditions are satisfied, or in the subsequent tax period. So you have basically only two tax periods to claim input VAT. If at all a registrant identifies that he has missed out on recovering input VAT and he is not able to claim within these two tax periods, then he can only recover this input VAT by revising the VAT return, by revising any of the VAT returns of these two tax periods. Now, the revision of the VAT return is also a separate process, uh, uh, which I will just briefly like to touch base on. So the revision of the VAT return here works on the basis of filing a voluntary disclosure. So voluntary disclosure is basically to be undertaken to revise your VAT return. So for that also there is a condition that such revision can only be done if the impact, if the change in the values from the VAT perspective is more than 10,000 dirhams for a single tax period. So you can file a voluntary disclosure in order to revise your VAT return if the impact of the VAT is more than 10,000 dirhams for that particular VAT return period. So this
Okay.
is how you can recover your input VAT which you have not claimed within those two tax periods, and also how you can revise your VAT return in case if you want to rectify any of the mistakes voluntarily. Please note that there is also a voluntary disclosure filing fee which is to be paid in this case. The voluntary disclosure filing fee is 3,000 dirham for the first time and 5,000 for every subsequent VD that is to be filed within a span of 24 months.
Okay, great. So I would like to correct myself. So I've talked about a time period for claiming input tax credit. So there is a little bit of change. So the change is the time period. Time period is a 1 year from the date of invoice. You can avail the input tax credit from 1 year from the date of invoice, not the 30th September. So I've confused it with that credit note and a debit note time period limit. So I think so. We have already discussed about the time limit as well as the input tax credit as well as the procedural aspect. So moreover, we have understood the aspects of GST as well as the VAT. So we would like to continue our videos on the similar topics, wherein we will cover the specific areas such as the input tax credit in brief in detail, as well as the export transactions, as well as the refund aspect, how to claim the refunds, and others also. So we will take up. So this video is all about a brief introduction of GST and the VAT. We will cover other aspects also in the times to come. So thank you guys for joining us. Thank you, Mridul, for joining us from different country altogether. We will be uh, hoping to continue in the same proposition as of now, and hopefully we will uh, we will continue the same in the future. Thank you guys for joining us, and please do subscribe our YouTube channel HPKV in the name, so you can get the link and you can able to subscribe our YouTube channel. So this channel is all about the professional updates in terms of taxes as well as the accounting aspect. So please do subscribe our YouTube channel. Thank you, Ritul. Any last word from your side, uh, which we can collaborate,
Yes,
which we
thank you. Thank you so much, Pratik and team. Yes, any feedback, please provide your comments, and we would be very happy, to look forward to your
Hmm.
suggestions and feedback, and we would work on those areas as well. Hope you have
Definitely,
liked our video, the content, the information, and feel free to reach us out. Thank you.
definitely. We will mention our email IDs on the context of the video. You can able to access that, and you can send us an email on that. So thank you, and please do give the feedback of our videos whenever possible. Thank you so much. Thank you.
Thank you.